Okay, well, let's get some more insight now from Ian Henderson, fund manager at JPMorgan. Mr. Henderson, thank you very much for joining us here today. Let's first of all try and just look at the wider perspective here. Why is it that BHP has set its cap on potash? What is it about this company that makes it a particularly good fit, if it is indeed for BHP?
I think BHP's very long been a great believer in wealth growing in the emerging world and Chinese demand increasing. And as people do get wealthier, the theory is that they will eat more or have a better diet, and that they will eat more. In addition to which, of course, the world's population is growing. So from that perspective, BHP, under its former management and current management, has been a long-term and correct believer in the world's demand for commodities increasing, and that obviously would include potash as people become wealthier.
Now, you mentioned China there. Both China and Brazil are considered to be potential rival bidders for this company.
It's possible that China might be, because for them, they are dependent upon potash imports. So they are a big customer of Potash Corporation. Brazil, I'm not so sure, because Brazil does have its own potash reserves, and these can be developed. And I think Vale is increasing their own production plans there already. So I personally think that, in this particular case, the question is it cheaper to buy than to build? And I think that the decision that has been made by the BHP board is that they want to get into this space now, because there have been a couple of years where demand has been very weak post the Lehman Brothers collapse and the inability of farmers to get finance. Clearly 2010 has been a huge recovery year for the potash market. Prices are a bit more stable, and at the moment, because BHP is generating so much cash, it is in a strong position to go to the bankers and finance a deal of this nature. My concern is that, clearly the fact that they are paying cash. So I'm not really answering your question. But
but it's an interesting. That is kind of the next issue, isn't it? Is how much are they likely to pay for this? I mean, obviously 130 is not the price that they're going to end up paying for it, is it?
Well, the market is saying, no, that's not the price. And Mr. O'Brien has been quite vocal in his view that this is a unique asset. And in a sense, it's rather like a hotel. It's like the Ritz. There's only one Ritz hotel around. And there is no doubt about it that this is a fantastic asset.
But credit ratings agencies and indeed some analysts are getting a little bit concerned that actually they might take on too much debt. They might actually overbid, I guess, for it.
Well, they must be aware of the importance of not upsetting the credit agencies and maintaining their credit rating. That's obviously extremely important. They have the finance for this deal done already, using the auspices of, amongst others, JPMorgan. So, they can do it at the current price, but of course that might change.
And just overall, we've seen Rio Tinto, a deal that didn't work for them. Overall, do you think that this deal's going to work?
Well, the issue really is, with any commodity, is what are the commodities going to sell for? And it depends what you put in as your long-term price for potash and phosphate and nitrogen in this particular case. If you lowball it and do what people are expecting, which is put a price of about 360.
Okay, I'm afraid we'll have to leave it there.
Oh, okay.
Henderson, thank you very much indeed.